I'm not that super bullish. I think it all comes down to individual stock selection. If you can be in the right stocks in the right groups and stay ahead of that rotation, you could make some progress. But if you stay into a group a little bit too long, then you can get round tripped very quickly. So it's really, I keep on asking the question every day, what was strong previously that has sat out for the last couple of weeks? And yesterday I moved into some into the financials, and and the retailers have come back on again also. So it's always asking that question, what are they not, what's the market not paying attention to now, and what will be the next group that comes back on? And that's the way I think you stay ahead of this rotation.
That's tricky, though. Obviously, I mean,
Yeah.
it's nice if you can buy, like, use the trend your friend, but it's almost like you have to think about, to a certain extent, sort of try to anticipate what the next trend will be, and that's
Yeah.
tricky. So Justin, are you? I mean, obviously you are heavily involved in swing trader, but in general, I mean, you can argue that there's different ways of investing in like swing trading, sort of the market, or you can, or try to grit your teeth and hold through little rotations if you have winners. What are you doing with your own account?
Split. So there's certain stocks that I'm just holding, that I've held for a while. Some stocks like Cloudflare, Nvidia, DocuSign, and then there are the stocks that I'm trying to sell into strength as much as possible, and buy on after those dips happen. Again, they've come under pressure for a little bit, and then they rebound, and I get a little bit heavier. So last week I was, selling at the beginning of the week, and for some of them I was just trimming. Again, like maybe the Nvidias, and then on Thursday I was picking up a little bit, and then Friday I was going, pretty aggressive on Friday, because I feel like it's almost like one of those things where when you see the turn, you have to go a little bit more aggressive to take advantage of it, and then I try and scale out as we start getting into new high ground. So I've been trying to scale out a little bit, but I keep on seeming to get into other things. So it's not working out as well for me this time. But that is my goal, is to just be scaling out a little bit more, taking profits where I have them, and with things that there's a few things I have that just didn't pop like I expected. So maybe just kind of take some off the table there.
Gotcha. And Ken, what sectors are you looking at?
Well, I've got a good broad-based, selection of stocks that I'm currently holding. I mentioned when I was on earlier this week that I did, increase exposure from a pretty defensive stance last week. Definitely started, putting a little money to work. I bought one stock on Thursday last week, did a little more buying on Friday. So not on margin, but I'm up probably 85-90% invested at this point, and holding on to some nice gainers, innovative industrial properties, the marijuana REIT, IIPR, Danos, the shipping company, was a stock that I nibbled at last Thursday when it kind of turned higher late in the session. Shipping stocks had tough days yesterday with some reversals, but still have a nice gain in DAC. So I've increased exposure, but I agree that this is a trader's market with rotation happening, pretty often. So, but I'm still giving stocks room. I'm not really inclined to take profits in names where I have a short-term game of 12 to 15%, maybe 20%. So I'm just trying to give those room to work. But 5 straight gains for the Nasdaq, and volume really shriveling up here. Market looks a little vulnerable, but not enough for me to really start lowering my exposure at this point.
So Ken, could you take a look at Williams Sonoma? That had a nice start to the day, as you were anticipating, but it's already backing off.
Yeah, it looks like it's backing off highs. Really nice percentage gain, and this company had really bullish results 3 months ago. And then the quarter before that, it actually gapped out of a nice base. Yeah, right there. So this is, when a stock gaps up, obviously you want to see it holding gains. You've got a nice 15% gain, but the stock crossed the 200 level and is back below it now. So this is one where, I'll watch during the day and maybe check in with it during the second half of trading and see if buying demand is picking back up. It looks like some early selling in the stock, but really nice results.
And where would you be buying this stock? If it got back above the high of the day kind of thing, or would you not, or just stay away entirely?
No, I mean, I'm not averse to buying gaps up like this, but I do need to see that price action. I would need the stock to close above 200 is one thing I would be looking for. Doesn't necessarily need to close at its session high, but certainly want to see it, rally back above the 200 level and get a nice close well in the upper half of its range. So I'm content to watch this for a while and see if it can start to recover.
All right. I also want to just take a quick look at RH, if I can make that happen. Oh, that's moving back up, but where is this one actionable? It's sort of been choppy. Where would this one be, Ken? I mean, where would you, because it's bouncing off the 50-day line still. It's had these ups and downs.
Yeah, I mean, this is I don't know. This is a chart that's hard for me to make sense of. Obviously, that recent high of 744.56 is the recent high is a resistance level to watch. But this has tried to clear a few pivots recently and has just kind of pulled back each time. So it's holding support at the 50-day moving average. If I were in love with this stock and really were looking for a way to get into it, I think I'd wait for it to move over that recent high of 744.
I was looking at this myself with that bounce off the 50-day moving average line, but there have been a few of the stocks that I've been looking at as swing trades, again, looking for these bounces, these reversals, especially at moving average lines. And this just seemed a little bit steep to me. And the other thing that was bothering me, and David, maybe you can comment on this, because it seems like I keep running into this problem for stocks that we're looking for on Swing Trader. The volume just isn't coming in on the upside. We've got some red spikes that we saw last week, early in the week on the downside, and there just didn't seem to be any counterbalancing volume on the upside. And that seems to be the case here with RH. Is that something that you're finding? Is it something you're ignoring just because it's summertime and all the traders are in the Hamptons, or what's your take?
Yeah, usually at the end of the summer, you do get lighter volume. And I mean, if the stock sets up just perfectly, then I would still go ahead and buy it, even if you don't get the volume. But I mean, obviously the best situation is when you get you get some huge volume increases. And yeah, in this case, but you have to look in this case, this really hasn't traded average daily volume for the last 2.5 months, it seems like, all the way back to early July.
Right. Mm-hmm.
So David, what about something like CRM, Salesforce? Is this one, it's breaking above sort of what we would saw, this consolidation though? Is this one that you would be interested in, or is the time already passed for this one?
Yeah, I mean, it's got a nice, it's got a long base, but look at the relative strength is 49. I wouldn't be chasing it here. Mm-hmm. I mean, if it built a handle, if it went sideways here for a couple of weeks, then I would possibly consider it. But even then, I mean, the earnings up 3%. There must be something inside those earnings that people are buying because a 3% increase is not that strong. And this is just a bigger, slower stock, and this is not one that I usually I pass on this one. I mean, it's been a great stock for years, but it's been a slow kind of plotter. So this is not something that is on my radar, and I wouldn't be buying it on a gap up like this.
This is one where you look at a monthly and it seems easy, but
yeah,
when you're actually trading it, oh man,
you just have to have a lot of patience and know the company well to know that it's going to go through months and months, or maybe even look at this as a year. It's been going sideways. So you have to know it well and have a lot of patience.
Gotcha. You know, another gap up, there's actually a lot of gap ups today for a day that we're going down, but NetApp, is this one, the RS rating is 88, definitely better earnings growth, though some of that's easy comparisons. Is this something that's a little more attractive to you, David? Or is this just not really what you're looking?
Yeah, no, that looks good. But I mean, I wish I owned it yesterday. Here, I wouldn't be chasing it because it's out there and it's now a bit extended. But this is one that has, I always like to see that a stock has had the ability to run in the past. And you can see this had a nice run, especially late last